Hello everyone, welcome to the Trend Invest channel. I hope all of you had a really good Diwali and I hope you had a lot of fun this weekend, long weekend that we had. Now today's video is a very interesting video because I have two stocks. One stock is a monopoly stock and it has already given a 10 plus year breakout, and another stock is a small cap stock from the pharma space and has given a 16-year breakout. Now, both stocks are really long-term stories, and I feel fundamentally also they look quite good from what I've analyzed, and I feel they have a lot of potential going ahead in the next 3 to 5 years. Okay, so let's take a look at these two videos. But before that, if you haven't subscribed to my channel, don't forget to subscribe and don't forget to like this video. Okay, let's jump into today's video. So the first company that I'm looking at today is MCX. So I found both these stocks in the scanner, in the weekly scanner that I ran on the Wednesday evening, and I'm recording this video on the Wednesday evening. So there might be a slight difference in the price when you notice this, probably on Thursday evening when the video is published. Okay, so this scanner that I showed here, CCI weekly crossing 100, you can already find the scanner and how to trade based on the scanner. This is a breakout scanner that I use to find long-term growth stories, and I've already done a video on this. You can find it in the Learn with Trendline playlist in my YouTube channel. Okay, but let's see what this stock has done. So it has crossed CCI, has turned bullish after a very long time, and the stock has not done well for the last 10 plus years or so, right? And that's why I'm covering this stock today. And let's take a look at the fundamentals first. Now, this company is a mid-cap company. It has around 7,600 crores market cap. It has a ROC of 10, ROE of 8. P is slightly high, it's slightly overvalued, but given that this stock is a monopoly, I think this stock deserves a really high PE. And given that the company, is in this commodity trading space, I feel there's a lot of potential in this company. Now let's take a look at this report on the left-hand side, which I have taken from ICICI Direct. This is ICICI Direct's report and what they say about the potential of multi-commodity exchange stock, and this report is published just a couple of days back, so it's very latest and very relevant. So if in case you want to find this report, just type multi-commodity exchange ICICI Direct PDF and you will get that in your Google results. Now the primary reason why we saw a huge move on Tuesday in the stock is because it really posted some really good results, and one of the primary reasons for the good results was in the rise in volume and options that has happened in the last quarter. Right, so overall, ICICI Direct says that the option volume growth and cost improvement are setting up really good prospects for financial 2024, and also the thesis for the entire price move up for multi-commodity exchange or MCX is the rise in volume and options, and that has been their thesis for the last few years or so. And if you see, the options average daily turnover has risen sharply from 198 billion rupees in Q1 FY23 to almost 313 in Q2 FY. Now that's more than a 50% jump in the average daily turnover in the MCX stock exchange, right? Now there are a few more points. Option volumes can maintain, so they're saying it can maintain the current momentum with the launch of new products. So MCX has plans to launch more new products coming in the coming quarters, such as gold monthly options with futures as underlying asset, and also as I mentioned, the recent quarterly results, MCX reported a strong EBITDA growth. So EBITDA is earning before income tax depreciation, 33% quarter on quarter, driven by a strong option volume growth, which resulted in operating leverage benefits. Now remember, as and when the option volume increases in this exchange, we are going to see a massive impact on the EBITDA, on the PAT, and eventually the stock price will also move higher. Now, if they are able to introduce more option products in the coming years, coming months, and also if they're able to trade, if they're able to bring in more volume in the exchange, and if commodity as a trading instrument gets more popularized in India, then we're going to see some really huge operating leverage benefits for this exchange, which has a monopoly in India. So overall growth in options, stable future volumes, and reduction in the software cost. Now remember, they are migrating their software, I think, to a platform which is less cost effective, and I think it's done by TCS. I'm not sure exactly, but I think it's TCS, and this new software that they're getting is not that costly. Remember, 14 to 15% of their overall cost is for the operating the software and platform that they have. Right now, that cost, if it comes down, is going to also play a huge benefit in the overall company. Now you can read more points about MCX here, but now let's look at the yearly results that they've been posting for the last few years, and let's see the trend. Now, since 2011, the company has been kind of posting some decent numbers, but what has happened of late is so since 2019, if you see, since 2017, in fact, the revenues dipped. It hit a low of 259 crores. Now it has again risen and it is trending around 432 on trailing 12 months is around 432 crores. And if you see, the PAT also is doing pretty good. Now this company is a very profitable company, right? If you see the operating margins, they're very high. It's because it's an exchange business, and just like other exchanges, it has a huge operating profit margin, which is translating into a high net profit at the bottom, right? Overall, the company sales has been growing steadily over the last many years. The profit has been kind of up and down kind of a sort, but overall, I think in the next couple of years or the next few quarters or so, we should see some really good rise in the overall PAT for this company. Okay, so that's the fundamental take. Do let me know your thoughts on MCX if you have done some analysis. If not, let's move on to the technicals, which is my favorite part. Now, in front of me, I have the monthly charts of MCX. Right now, this company was listed back in 2012. We had this massive consolidation. You could say this was also a massive cup and handle. I don't really get into the names, but this is a massive consolidation we had, and we had a breakout for the first time in 2020. Right after that COVID lows, we had a crazy breakout. And then we had this nice sideways correction. Almost for last 2 years, there's been a massive sideways correction towards the primary trend line. Now remember, this trend line has been very effective. I did post about MCX a couple of months back in Twitter that we are probably forming a major bottom, right? And this was the month when I posted somewhere there, and now we've had a strong monthly candle this month in October. Also notice the wicks around the lows in the last 1 year or so. We've had some strong wicks. By wicks, I mean the tail that you see here for the candles has been really strong, indicating that demand. Every time the stock drops, there is demand and someone is buying the stock, right? So overall, for me, this trend line retest and with this crazy super strong candle that we've had on this monthly charts is definitely a very positive sign. And clubbing this with the fundamental take that I did just recently, just a few minutes back, I feel there's a huge potential for the stock, and we probably might go higher. And I don't know how higher we might go, but depends on the results coming, depends on how the company performs. But for me, this is probably a bottom, and the stock might head higher from here. Now I'm going to zoom into this area just to show you the recent price action on the weekly charts, and also let's discuss the targets and the stop loss. So here, if you see, the stock had a kind of a symmetrical triangle consolidation over here, and we had a breakout here. Now we had a gap up on the Muhurat day, and after that we just took off on Tuesday, and we had some strong volumes coming in. CCI is turning bullish. RS, which is latest strength, also is turning bullish. Now if you don't understand what is RS, do check out my Learn with Trendline Investor playlist. I've done a video on RS in case you want to understand what this means. Now for the first time, both the CCI and the RS are entering a bullish territory. Now that's a very strong sign, along with the monthly candle, along with the volumes picking up. Now that's a very strong sign that this stock has formed a major bottom, and from here on the stock might head higher. So for me, this is a pretty good stock to enter in currently for the next couple of years. Even you can do a SIP if you want, because I feel this is a story which might tend to do well over the next few years. So a SIP investment also is one of the options that you could do. So overall, you can buy the stock at current market price. Let's keep a stop loss around 1290. Now 1290 is somewhere around this lows of the last 2 weeks low. We had this inside bar kind of a pattern after this massive weekly candle, and I'm going to look for targets of 2000 first, which is the all-time highs that we had in just post the COVID crash, and the next target would be somewhere around 3000, which is almost 100% returns from the current market price now, which is almost 7 times the risk reward if we reach 3000 as targets. Okay, so that's the first stock I want to discuss today. I hope you like my technical analysis and the fundamental analysis. Don't forget to share this video with your friends, because this is a bullish stock and fundamentally also looking good, and it might do well in the next 3 to 5 years. Now, that's the first stock for today. The second stock I want to discuss today is a microcap stock, Vimta Labs. And Vimta Labs is just a 800 crore market cap company. Again, I found this in the weekly CCI crossing 100 scanner. It came in the small cap segment. Now there are many other stocks which I can look at, but these are stocks which might just beginning a major bullish uptrend, and which might last for the next few years or so. Okay, so it's a small cap company which has a market cap of around 880 crores. ROC is 24. That's a pretty good ROC and ROE as well. The stock is trading at a P of just 19. Now, the entire pharma space for me is undervalued currently. Looking at how they've been performing, looking at the results that they've been having, I think pharma is probably beginning the next leg up So we had this massive 2 years consolidation after the COVID crash, and I think this stock has a huge potential going forward. Also, sales growth is pretty good. If you look at the compounded sales growth for last 3 years at 9%, last year is 18%, overall 5 years, the profit has been growing at 32% CAGR, sales has been growing at 12% CAGR. A very profitable company with very good sales growth and profit growth figures. Okay, so that's introduction of the company, and this is the yearly trend of the sales and the PAT. Now, in the last 10 years, the company has gone up from 100 crore sales to almost 300 crore sales, if you look at recent numbers. And look at the operating margin. Now, for me, a company which is increasing its sales and it's able to increase its operating margin is a very, very bullish story, because the once the operating margins go higher and higher with the higher sales, we're going to see huge increase in profits, and that's why we're discussing Vimta Labs today. And look at the profit of the last year and the trailing 12 months. It's pretty high, almost all-time high. We were almost not profitable back in 2012, and we're doing a 40 crore profit in the last year or so, right? So in the interest also, if you see, they don't have much interest, which means it's almost a debt-free company. And yeah, the sales, profit, operating margin, everything is excellent from a fundamental perspective. Now, from a technicals, it's even convincing when you look at the technicals. Let's take a look at the monthly charts. So in monthly charts, we had this company was listed back in 2006. We had a crazy move down from 340, it went almost down to 10 rupees. And after it went 10 rupees, we had this massive consolidation and up move again. Around 2019, we went higher back to the 300 levels, and we had again a drop to 50 levels, and again we are now breaking out. Now, this breakout which happened a year ago is a 16-year breakout. Now, obviously we could not hold on to this, because a lot of people who were holding the stocks in the IPO exited, and that's why we had this fall. But now finally, after 16 years, we are now able to hold that IPO levels, and the stock has been consolidating beautifully for the last 1 year or so. Now, last 1 year, this is a proper time correction for me. And if you look at the candle of this June 2022 candle, right, we had a strong bullish candle, and then we had 3 months of sideways correction, retested that support zone over there, and again this month we are having a very strong bullish candle in this October month. So looking at this 1 year consolidation and the monthly candles in June and the monthly candle in October, volumes have completely dried up. Looking at all of this, I feel we are going to head higher. Also notice that it's taking support around that breakout zone over here. We have not gone below that. So overall, it's an excellent setup from a technical perspective, and we are probably heading higher from here. Now, that's the monthly charts, and I'm going to zoom into this area to show you the recent price action on the weekly charts. Okay, coming to the weekly charts now, I'm just focusing on the last 1 year pattern, 1 year consolidation that we saw. As I said, this stock came in scanner because of CCI crossing 100. Latest strength also is above 100 again. Now remember, CCI, even though latest strength was above the green line, the CCI wasn't above 100. So for me, when the latest strength plus the CCI is above 100, that's when for me the bullish signs are there for the stocks, and that's why we are seeing now both are bullish, and that's why we're discussing the stock. Now again, look at this beautiful 1 year consolidation, right? We had this major support zone over here. The stock kind of took off just in June 2022. There was nice correction here, and we saw this base forming over here. Now you see this VIX. Whenever we see VIX around a support zone, that is a strong sign that the stock is bottoming out. And also these wicks over here indicate that this zone around 300 to 320 level is a very, very strong support zone. And then we had this crazy candle last week, and this week we're kind of still hovering around that breakout, around that massive weekly candle. And now once we take out the zone, around 400 levels, once we take this out, or once we break above the zone, we're going to see all-time high levels. So what I would recommend is allocate 5% of your portfolio to the stock, buy at current market price, or anywhere between 400 and 420 levels. Keep a stop loss of around 320 levels, which is just 20% from here. Now this is a small cap stock, so 20% is not a very deep stop loss from my perspective, and we are looking at 100% returns from here, which is around 800. Now remember, this is breaking out from a 16-year long pattern, right? Now if you want, you can also hold this for the next many years. Try to ride the trends on the weekly charts using a swing high, swing low method, and you might even get much higher returns. Just remember, the company is doing well in terms of fundamentals. Technicals is a 16-year breakout. Now when you club both, it's a beautiful story to hold on to for the next many years as well. Okay, so these are two stocks I want to discuss today. I hope you liked both of my stock analysis, and if you want me to cover anything that you don't understand, do let me know in the comments, or tag me on Twitter and ask me your questions. So that's it for today. I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye-bye.